Good day. So today I want to talk about my open positions, what I'm looking for in the markets, and then in the latter half of the video I want to talk about a somewhat controversial topic for whatever reason in the trading community as to which is more important, technicals or fundamentals, which, spoiler alert, I find the argument completely ridiculous and pointless, and there isn't much rationale behind it, and I'll explain my reason for that when I get into that section. So if you don't care about my open positions and what I'm looking for in the markets, you can just skip the first half of the video and head to the discussion about technicals and fundamentals in the latter half. So with that being said, let's get into the market analysis. So I have two positions open at the moment. It's a short on gold. I've been in this position since Sunday evening. I already explained the rationale behind this, so I won't really get into the explanation again. But the sell-off that we're seeing, I honestly was not anticipating the sell-off to be this quick. It's obvious that I was not anticipating the sell-off this quick if you simply look at my stop loss. So my stop loss is 5%. So if gold went up 5%, I would have been stopped out. So yeah, this is more of a long-term swing trade where I'm looking to be in maybe for 2 weeks to a month. So yeah, that was my idea. So I did not really anticipate the market to sell off this fast. If I did, I would have probably set my stop loss about here, and the risk reward would have been better. But I did not anticipate this, so this is, in my opinion, it's good, I guess. I'm in profits. But yeah, that's what's happening now. We're at a key level of support. So this line right here was where we basically began to range, and we have rejected off this level of support. And the question is, will this support level hold? I don't know. So far, we have been holding. If we look at the 1 hour time frame, this looks so messy. I do not know how people use lower time frames, but anyways, if we look at the 1 hour time frame, we can see that we came at this level of support. We tried to break below and fail. So buyers came here, pushed price up. We saw price came back to support again, bounced once more, and buyers pushing price up. So it is clear that buyers are defending their longs here. So will we bounce? I don't know. These intraday price reactions don't really matter me much, but we might continue this range until a catalyst comes that may push price out of this range and back to the downside. So I'm bearish on gold until we hit the previous all-time high here. So if we retrace back to this level, I'm looking for a buy. So I'm basically selling a retracement here, and that was in my analysis. You can check out the video on why I took a short here. So that's basically what I'm doing on gold. It's in some profits right now. The next position is AUD CAD. This is a position that I took yesterday that's in some drawdown, unfortunately. So I have two positions open on this, one with 100 pips stop loss and another with, so let me put this here. So my other position has a 60 pip stop loss right here, and one has a 100 pip stop loss. Now my idea for this, if we look at the data, so if we look at the data here, go to Australian dollar, we can see what's driving Australian dollar. Economic fundamentals at the moment, it's okay. We have strong labor market, strong productivity. The narratives right now is basically mixed, and COT positioning looks good. Technicals also look good. So I like the factors that are driving the price of the Australian dollar. We recently actually received some economic data. So we received on Tuesday, we got the monthly CPI year over year, which is right here, which actually came in weaker than expected. So this is not good for the Australian dollar. And we also had private capex for Q4, which also came in weaker than expected. So these two recent data points that we received are actually not good for the Australian dollar. But overall, if we look at the factors driving price, it still remains bullish. So we got a pullback on these data, and that's kind of why I took the buy, because overall it's the Australian dollar, in my opinion, is still bullish, and the Canadian dollar, on the other hand, it's bullish, but it's less bullish, basically, you know. So it's bearish, well, relative to the Australian dollar, in my opinion. And I actually need to update this a bit. So yeah, I need to update this, because easing tariff fears is actually yellow, and yeah, so I need to update this some more. But basically, the Canadian dollar, in my opinion, I'm bearish on the Canadian dollar, right? So that's kind of why I took the short. I'm in some drawdown, and yeah, the reason for that is part of the reason for that is the reaction. So I took my entry right here. So in this region right here is where I took my entry, right here, and we can see that the reaction was very good. Like the moment I clicked buy in profits, everything was going great. I was like, whoa, this is an amazing entry. And then Trump came in talking about 25% tariffs on Europe or whatever. Boom. We basically gave back all that gains, and yeah, we've been trending down since. And the price action on the 1 hour is not favoring the bulls. So the price action here, we broke below the support on the Trump news. We tried to break above and failed. Now we're well below. We tried to break above, we retested and failed. So the price action at the moment does not look all that good, and we might continue to get some choppiness in price action until I believe a catalyst can push price up. So we're in a bit of drawdown at the moment on the AUD CAD, and yeah, that's basically my open positions. I'm only in 2 positions, short on gold, long on AUD CAD. Next thing, lastly, before I dive into the discussion about technicals and fundamentals, I want to talk about this AUD USD, because I have been warning you guys that be very careful being a bear on the dollar. And the reason why I was very careful about being a bear on the dollar, and why I did not execute any short on the dollar, if we look at the dollar right now, we're seeing some strength, right? And the reason for that was, it comes back again to what was driving price. So the economic fundamentals for the dollar, it was okay, but the narratives that were driving price, and also need to update this, the narratives that were driving price, in my opinion, were just not completely justified. So I did not want to go short the dollar because of these narratives, and also emotions were driving price. We are seeing that dollar bulls are becoming a bit exhausted. They want to close their lungs. I do not want to go short on that. So that's why I've been warning about being a dollar bear. And if you were a dollar bear in the past week or so from about here to here, it has not been the best for you. So that is why I'm basically neutral on the dollar. I'm not bullish or bearish. I'm just cautious, and we're seeing that we're getting a bit of strength now. We have clearly hit a level of resistance right here. So for the initial reaction, we're seeing a bit of weakness. Will that continue? I don't know. I still remain neutral on the dollar. But back to this AUD USD. If you've been following this channel, you know that I actually executed a short on AUD USD and got stopped out. So I executed a short right here. So I was watching price action, and based on my analysis, and it was the same reason, I was saying the factors that are driving the dollar down, I do not like them. I do not think they are fully justified. So I was like, I'm going to take a short on the US on AUD USD. So I took a position like this because I was like, okay, this breakout is going to fail, and we're going to head back right back at this support level. So this was my idea on the trade. I took this setup, and if we look what happened, market was going down. I was like, okay, it looks good. Boom. One green candle stopped me out, and this is one of the reasons why I don't like to use very close stop loss. I like to use stop loss between 70 to 100 pips, because it gives you enough breathing room for things like this. So if I if I had actually set my stop loss to, let's say, about 70 pips or about 80 pips, this would have happened. I would have still been in my short here, and I would have been in some profits right now. But I had a very tight stop loss because I was looking at the risk reward. I was like, yes, we're topping out. If we actually top out and fall back into the range, this is like a 4-5 risk reward. So I'm risking, say, 1% of my account and I'll get 5%. So I was focusing on that, and I used a tight stop loss, and I paid for it literally. So yeah, I got stopped out of this position, and now it's playing out. So that's really a bummer. That's really a bummer. So yeah, I'll just warn against being a dollar bear at the moment, because the factors that are driving price, I just don't really like the factors that are driving price. So yeah, that's my position. That's kind of what I'm looking for. Oh, and the Nasdaq. Speaking of positioning, I made a video yesterday talking about my Nasdaq analysis. I was saying that all of the fear is justified, but you need to relax and look at other factors, be forward looking. So the Nasdaq, I'm actually bullish on the Nasdaq, even though everyone else is bearish and fearful. So I'm waiting for a pullback to somewhere in this region to take a setup on the Nasdaq. So I've been waiting for this for weeks. So a pullback anywhere here, I'll be looking for something like this and targeting back at the top of the range. So that's kind of me on the Nasdaq. I'm still waiting for pullbacks on the Nasdaq, and that's just in anticipation of better US economic data, because as mentioned, I kind of believe that the fear that everyone is expressing, saying the US economy is going to crash, growth is going to slow and everything, I believe that is a bit overstretched. So yeah, I'm just waiting for a pullback, and I like to trade ranging markets. If we high this year, the market is in a range, right? And usually in a ranging market, it just continues to range. And ranging markets, you just buy support, sell resistance, right? So that's what I'm looking for in the Nasdaq. If you look at something like the Nikkei, which has been in a range since like June, right? If you were just buying support, so buy here, buy here, buy here, and just selling resistance, sell here, you would have been making a lot of money. And I've actually took a few buys here. So I took a buy here. I remember I took another buy somewhere here. I don't really like selling resistance because, it's equities, so it can easily break out. So I don't really like selling resistance. But if you see, we literally came back at support yesterday, and I did not take this buy because I have not been watching Nikkei a lot. So I missed this buy here. And as you can clearly see, we're bouncing off support. But there's a multitude of factors why I'm not taking this Nikkei buy. But ranging markets, they're literally just buy support, sell resistance, basically. So that's kind of what we're in the Nasdaq at the moment. So once we're back at support, I'm looking to buy. So that's how I'm planning to position on the Nasdaq. Now let's talk about technicals and fundamentals. As you know, I use a lot of fundamentals in my trading. And as you can clearly see from this Nasdaq chart, I use a lot of technicals as well. So, in my opinion, the argument between which is better, fundamentals or technicals, it's very stupid, and you should not be having that argument. My philosophy is this. And if we go back into my notion, I believe that there's 4 things that move price: economic fundamentals, narratives, emotions, and technicals. Those are the 4 factors that I believe move price, and the only 4 factors. I don't believe anything else moves price, only those 4 things. I do not prefer one over the other. So I am not saying, okay, fundamentals move price, so therefore I'll give more attention to fundamentals, or narratives move price, so therefore I'll give more attention to narratives. That, in my opinion, does not make a lot of sense, because at different times you will realize that different factors have a stronger weighting basically on price. So at the moment, if we look at the yen, everything is bullish for the yen. Economic fundamentals is good. The narratives are good. There's not much emotions driving price. Well, there's a bit of fear around US uncertainty, but there's not much emotion driving price in the yen. And technicals look great. So in a situation like this means that the yen should just be going up and up and up and up, right? Because everything that's driving price is good. But if we look at the yen, sure, the overall strength is bullish, and look at this, we're actually seeing weakness today. So this is actually the perfect example to highlight what I want to say. So everything for the yen is bullish right now, that's driving price. Then why are we seeing weakness? Why are we seeing selling? The yen is down minus 80% today, not 80%, 0.80% today, right? Why is that if everything is bullish? And this is because of technicals. So at the moment, technicals, if you are a trader and you trade the Japanese yen, technicals is more important than economic fundamentals, narratives, and emotions. And I noted this here. I added in my comments and I'll zoom in. I said Japan currently has very strong fundamentals, strong narratives, strong positioning, and is bullish from a technical perspective. So therefore, technicals seem to be the main driver of price. Therefore, I am looking for longs and pullbacks as long as the bullish story remains intact. Technicals are the main driver of price in the yen at the moment. Let's do a bit of analysis. So you can see that I have these support and resistance lines on my chart, and basically every single one of them are being respected. So we see the support right here, price came, rejected at the support. We see a resistance right here, price came, rejected. Price came at this right here, rejected, support. So you're seeing that price is bouncing off support and resistance. So obviously technicals are important. They drive price. They play an important role. But it's just being able to use technicals in combination with fundamentals, right? So this move right here, in this section, so this sell-off that we saw in the yen right here, this was a purely 100% technical sell-off. This was not because of fundamental reason. This was not because of emotions. This was not because of narratives. We simply hit a level of resistance and started selling. That's what caused this sell-off. So whenever you are analyzing the markets and you see something like this where fundamentals is strong, narratives and emotions and everything is strong, technicals are more than likely going to be the main driver of price. So we're seeing this sell-off. But if you are not an emotional trader, you realize that technicals are the main driver of price. When you see this pullback, you would be saying to yourself, hey, I'm going to go long on this pullback. So when you saw something like this right here, right, this sell-off right here, you would be looking at support zones to say, I'm going to buy when we get this technical pullback, because overall, from a fundamental perspective, the yen still remains strong. So you could have done something like this. And if you've been following this channel, this is exactly what I did. This is exactly what I did. I actually took a short on CAD JPY that I closed out on I closed this position on Sunday evening, right? And that was a technical entry. Technicals at that point was very important. So we got this technical pullback. I entered here, boom. Now, if you look again, we're at a level of resistance. This is a double top and we're failing to break this level of resistance. This is not because of fundamental reasons. The narratives has not changed. Nothing has changed. It's still, the fundamentals are still strong. The economic fundamentals, the narratives, everything is still strong. Nothing has changed. So why are we rejecting? Why are we selling? Because we're at a technical level. And this is what I mentioned, that I am still bullish on the yen, but I'm waiting for a pullback. So if we see something like this on the yen, boom, I'll be looking for buys, right? As long as the bullish story remains intact. So I'd be looking to something like this and target for us to break this structure here. So this pullback right now, it's not surprising. I'm not like, no, what's causing this pullback? It's technicals. It's because of technicals. So technicals are important, and sometimes it's a lot more important than fundamentals. Like right now, if you're a yen trader, you need to pay very close attention to the technicals, right? And then you have other times when fundamentals completely disregard technicals almost don't matter, so you have times when, like, this was the unwind of the yen carry trade, like sure, we saw a bit of rejection here from a technical perspective still, but you can see that price, it was just very heavily driven by fundamentals. So at a time like this, fundamentals were more important. And then you have things like emotions. So emotions also drive price, right? So sometimes you will see price going up aggressively, and it is heavily emotion driven. Like if we look at the Nasdaq right now, this sell-off right here, it's driven by fundamental reasons, but a lot of the selling is also driven by emotions, and that is the emotion of fear. So at different points, different factors have different weighting on price. So sometimes you need to be in tune with the technicals. You need to fully understand technicals and trade with the technicals. And sometimes it's fundamental. Sometimes fundamentals are really important. It's everything in the markets. You need to pay attention to it. Sometimes it's emotions that's driving price. Sometimes it's narratives, So as a trader, you should not be thinking which is more important, fundamentals or technicals, because at the end of the day, it's a fact that both technicals and fundamentals drive price. So you need to pay attention to both of them and understanding when one is having a heavier influence on price and when the other is not. So that's kind of my opinion on technicals and fundamentals. I think it's the argument behind it is just pointless, and if you're a trader, you should not be arguing about which is more important. You should be using both and give each equal weighting whenever it is relevant. So yeah, that's my opinion on technicals and fundamentals. So yeah, just a review of my positions. AUD CAD is down a bit more. This is, maybe we'll get stopped out here out of my 60 pip stop loss position, but I have another one that's 100 pip here, so let's see how that goes. And gold, let's see what's happening in gold. Okay, we're down 1% on the day on gold, so we'll probably break this level of support, and if we do, I believe we'll continue, because there's so much liquidity below here. There's so much stop loss below here, so I believe that, hey, if we break the support, we may more than likely see a continuation back here. So yeah, that's my positioning, that's my opinion on this whole technical fundamental thing. And yeah, peace, trade safe.